All right, everybody. Stocks by the numbers. Welcome back. Just a couple of more earnings updates, real quick. We'll look at some numbers here. Honest Company, HNST, listed here on the Nasdaq. Stock closed 324, up 12 cents, almost 4% day here for HNST. And we can see after hours earnings coming in above analyst expectations. Stocks up 21 cents right now, 345, another 6.5%. Almost hit $4 right there, hitting 390. This was a top trend line I'll get to in a second. And of course, we have this trend line that it spiked up above and then pulled back below. But technically a good report for HNST, in my opinion. Numbers look pretty strong. As we see, 93 million revenue. Estimate was 87, so they come in almost 7% above that expectation. And slightly reporting above this loss, as you see, 4 cents a share. Analysts were expecting 4.2 cents a share, so they beat by about 4% on the EPS side, but I believe guidance was also raised. Mid to high single digit percentage revenue growth. Raises full year outlook. Improved profitability, gross margin 38%. Raises 2024 revenue and adjusted EBITDA outlook. Team's commitment to our 3 transformation pillars, resulting in outstanding performance. In addition to delivering our highest quarterly revenue of 93 million in the second quarter, we continue to increase profitability and achieve gross margin of 38%. This strong performance and momentum gives us confidence to raise our financial outlook for the full year. We are a company of builders, stronger financials. Revenue 93 million, increase of 10%. Baby products and wipes portfolios, very nice. Gross margin up above 38%, 27% this time last year. That's a pretty good increase. Not too shabby. Cost structure, including supply chain, product costs, price increases, efficient trade spend. Operating expenses increased 3 million. Okay, so less of revenue went to operating expenses. Net loss 4 million compared to a loss of 13 million this time last year. Adjusted EBITDA positive 8 million was a loss of 4 million this time last year. Third consecutive quarter of positive adjusted EBITDA. 37 million in cash. Almost doubling from the amount of cash they had this time last year. No debt on the balance sheet. This company seems pretty healthy in my opinion. Slow, steady grower. And again, raising their outlook for the year. Keeping spending in check. Full year 24 outlook for both revenue. Prior outlook was low to mid single digit percentage growth. Now it's mid to high single digit percentage growth, right? So we just went from 3, 4, 5% up to 5, 6, 7, 8% potentially. Adjusted EBITDA 15 to 18 million range. Positive low single digit to mid single digit millions range. So again, instead of potentially, 6, actually more like, like 4, 5, 6. Now we're 15 to 18 million. Not bad. Not bad at all, in my opinion. This was a company that, when we looked at it, overall in general, again, you can see market cap just a couple of 100 million. And in my opinion, again, with no debt, they're holding cash. They're consistently coming in above expectations on the EPS side. Revenue seems to be steadily growing strong. Again, looks like Q1 is their quietest quarter. They were down to 86.25 million about for last earnings. Now they come out and they bring in back over 90, up to 93. And that's the annual growth right there, ticking up nicely. Slight pullback in 22, climbing back up in 23. And now it looks like 24 is going to remain a solid year. In my opinion, I do personally like Honest overall. And I know the last time we looked at it, we were looking at like this wedge and this beautiful breakup here back to $4 a share. That was an excellent trade here on this channel and in the Discord as well. Discord link in the description of every video, free for you guys to join. Had a bunch of people mention that they made some nice returns on HNST. And here in the short term, again, we're up after hours. And in the long term, I like it as well, in my opinion. Stock hit, what did the stock hit? 390. Stock hit 390, got above that 352, right now 345, technically below this resistance level, but we just bounced off the 50-day. We've kind of been trending upward, and I'm sure a lot of people were waiting to see how they would report, and they came out with a solid report in my eyes. So I do think that the stock will now bounce and potentially make these higher highs, and we could see like these low fours right here, maybe about 4 1/3 at this resistance level potentially. MACD should start to flatten out and curl to the upside, in my opinion. RSI, middle of the road here, 46 1/4 going into these earnings. So we definitely have some room to climb here, in my eyes. Even right here as well on the weekly, you can see, look at this resistance level, 434. So you got like 433, you got 434 on the daily and the weekly, right? And it's, again, was technically a good report. So in my opinion, they may just steadily climb this up to about 4 1/3. Of course, it really could break up and break out. Again, the company, let's see what they did. Brought in over 300 million. Lost 39. So if we just subtract the loss from the revenue coming in, you're still at about like 305 revenue. And the company has market cap 319, right? And they said what? They got like 20 million cash on hand or whatever it was, and they have no debt. So you know what I mean? Even if you give that a 1.5 multiplier, you're looking at a market cap of like 460, 480 million, which obviously is a pretty decent percentage climb from where the stock is currently trading. Someone also mentioned Take-Two Interactive Software. TTWO listed here on the NASDAQ. Stock closed 138.78, up a little over 3 points, 2.3% on the day. Stock is up another almost 7.5 points, 5 1/3%, up to 146.20. And, you know, unfortunately, this is just one of those situations where, again, me personally, I do not agree, but however we personally feel about a stock doesn't always come to fruition. We know that. We can see the losses were a big miss here, as you see, posting a loss of over $1 a share. Analysts were expecting 2.5 cents. Revenue came in light as well, 1.218 billion compared to estimates of 1.257 billion. They also said that they're guiding for wider losses, I believe, if I read this correctly, but apparently the stock is up. But we don't know what's going to continue after hours, and of course how the stock may look pre-market. Revenue, top line results were up 4% year over year. Net bookings came in 1.22 billion, up 1% year over year. Net loss $1.52 versus loss of $1.22 this time last year. By engaging with our players, management team remains confident. We are reiterating our net bookings outlook for the year of 5.55 billion to 5.65 billion. Take-Two expects second quarter revenue to be in the range of 1.29 billion to 1.34 billion. Company anticipates a loss of 215 to 230 per share in the second quarter. Also guided for full year revenue of 5.57 billion to 5.67 billion. Company anticipates a full year net loss of 395 to 433 a share. Highly anticipated GTA 6, currently slated for a release in the fall of 25. So this is what I mean. Almost like, in my opinion, it's almost like what we used to see with the other tech companies reporting, where if they would like miss on the EPS or they would slightly miss on the revenue, you know, they would mention that they're venturing into AI or they're going to start, you know, incorporating AI, and then the stock would start climbing after hours just because they mentioned AI. Unfortunately, again, I'm not trying to rain on anyone's parade, but technically it wasn't really a good quarter for TTWO. And I did mention that they, in my opinion, they were going to continue to struggle throughout the year. And basically what you're seeing here, again, is just the re-mention of GTA 6, which, of course, is their bread and butter. That's their flagship franchise, which brings in the most revenue for the company. And of course, just kind of re-mentioning that, oh yeah, it's coming soon, it'll be out, basically this time next year. Everyone is still kind of looking for that future business to start coming in. Quote, we are highly optimistic about our future. Teams are hard at work. Sequential increases in net bookings in fiscal 26 and 27, which we believe will drive long-term shareholder value. Yeah, again, in my opinion, loss widens on higher spending for mobile games. Increase marketing spending. Mobile games coming out of Zynga. Yeah, see, this is saying 126 billion. TradingView obviously is giving us a different number, but that loss, I mean, again, technically we pump a lot of these stocks up, especially these tech companies. We pump them up because of their higher profit margins. And now, this company comes in, technically misses on revenue and posts a wider than expected loss. And the stock sees a little bit of a bump. Net bookings rose 1%, below expectations. In my opinion, stock should be down, but again, that is just me. Obviously, if you jumped in calls, you see a 5% pop, you're feeling pretty good right now. Net revenue up. Yeah, I don't know, that loss. Hold on, company expense. But where was the previous guidance? Because I believe, again, they're forecasting for the year those numbers, but I believe it was below. Here, look, company reiterated its fiscal year revenue guidance of 5.57 billion to 5.67 billion. Analysts expecting 5.65 billion. So analysts are basically at the very top of this range, and they reiterated this range that seems like it has a high probability to come in below what analysts were expecting. So I don't know. Maybe in my opinion, they're gonna keep the stock up, and wait for the last minute, and then if they close out the year below expectations, they're gonna tank it. Yeah, it's all about GTA though. I know people are really pumped about GTA and GTA 5. Extremely popular. So I know everyone's pretty pumped about that, but technically we're above trend lines here. Let's back up a little bit. No, they were adjusted after hours. My apologies. But actually, wait. If we come back to, yeah, like there. What are we looking at here? Oh, keyboard just disconnected. Okay, so we still have some room to go. So that trend line would be about like 150 and a half, which apparently it could get to. We did come all the way down to this trend line again, and again, just to back that up for you, that was a much longer term trend line, as you see. That was going all the way back to this low here of July 30th, 2012, connecting to the bottom there, November 7th, 22, and coming up. And you can see that the stock recently, let's zoom in a little bit. You can see that the stock recently chunked down coming into these earnings and actually broke below that 12-year support trend line. And then we had the bounce right back up coming into these earnings. And now apparently we're bouncing it off of this line. You can see it's stopping right here at the top of this previous candle, though, as it started to big red chunk down. Which is why, again, in my opinion, technically it was a miss. And, I know they try to paint it more optimistically as possible, but, I just laugh because, a company like this, we give them credit for what they reported and we're looking for future growth, 1% growth in bookings year over year, and then we have a company like Fubo that's showing, tremendous revenue growth, beating analyst expectations more consistently than something like TTWO, increasing subscriber growth by, 20+%. And even when they come out with a beat, they'll remain quiet or they'll have a little pop and they'll immediately start selling off. And I understand that, they're very different companies. This is a video game developer. I understand all of that. But also at the same time, these numbers do mean something. And to just kind of reiterate something more positive that's coming down the road to try to gloss over the fact that we're now expecting wider than expected losses potentially moving forward, not only for the year but for this quarter as well. I mean, I don't know. In my opinion, a lot of these names are being rewarded when they really shouldn't be. And I'm not saying to completely crash the stock down, but the fact that it came down here right to this support trend line and then technically missed, it really should kind of like be holding this bottom support trend line down here in the high 130s, in my opinion, as opposed to going to the high 140s. But chances are, based on what we're seeing, again, we could potentially run back to this trend line here of about 150, but maybe we can meet up here, this fib 148.70, no, 148.63, and potentially kind of meet up with the 20-day moving average there, and then maybe reject from there and start to head back down. But this is why trading is so hard, right? Because I'm sure there were a bunch of people out there who might have said, no, take two, they might be struggling, I'm going to buy puts. And then you see the earnings come out and they technically miss, but the stock is up. And I understand people are going to say there was a little bit of a relief bounce here. RSI was well below 30 on the daily, popped back up to 31 going into the close. Little 2% run coming into these numbers. So I appreciate the fact they might want to continue to feed off of that low RSI momentum, but technically in the numbers, it really should come right back down. And right now we're at 146.5 even, and you can see we have a old support level that we just fell through here of 146.81. So it looks like that may be a key level to watch right now on the daily. RSI on the weekly was down to about 37. We have a level at 142, which obviously we're a couple of points above. And now you can see you have the 200-day moving average, 149.63, 50-day moving average on the weekly, 150.77, which is why I was saying, in my opinion, they may run it up to that trend line we drew out at around that 150 level. And you can see, again, that was connecting, that was coming down here from these tops on, looks like June 6th, coming down to July 24th, 25th, July 31st. And you can see that if we pull that up, you're looking at about 150.5, which again would be kind of right in between both of these 50 and 200-day moving averages. And again, on the 1 year, we can potentially kind of meet up with this falling 20-day moving average, maybe around here in the 149s, and then potentially reject off that line and come back. But again, we know anything can happen after hours. That's why earnings are a gamble. Options in general are a big gamble. But look at the Bollinger Bands real quick. 148.11 is our mid Bollinger Band on the daily. Stock still sitting here 146.5. So we'll see. We'll see again. But yeah, overall, in my opinion, it was technically a miss on TTWO. And I think the stock should be down. And this is an interesting situation because this may be something you might want to throw on the watch list and keep on the back burner maybe over the next couple of days, right? Because if the markets kind of just hold steady for the next day or two and this stock does run up to 148, 150, but technically they missed earnings and a lot of people feel they might be down. After this run up that a lot of people don't understand, that's when potential short sellers might hit the stock. And then if markets, again, I know we rebounded from that 1,000 point loss the other day, but if markets decide to now flip the script and start dropping back down over these potentially volatile months coming into elections here in the States, then this may be a situation where the argument is, you can make it that it was potentially overvalued at the 150 level. If it runs up here, they just missed earnings. Earnings have been hit and miss, right? So we can take it down now with the rest of the market. So I used to look for situations like that too. As I mentioned in the past, I would look for kind of fair or undervalued stocks, and then if they happen to beat earnings, but they didn't really move, or they were down 2, 3, 4%, that's when I would step in and I would buy calls and I would climb that rebound wave because most of the time they would climb because they technically did beat earnings unless they lowered guidance, right? But if it was a good report and the stock didn't really move, you had kind of like that delayed reaction, right? And that's what I'm trying to say here. If markets do start to sell off, something like TTWO, if they run it back up when a lot of people feel it shouldn't go up because they technically missed, it might be a prime target for some quick puts to ride it back down. But just an idea. Obviously, whatever you do with this information is entirely your own prerogative. But yeah, HNST, pretty decent report. TTWO, in my eyes, kind of a report, but you're seeing a 5.5% pop here after hours. Anyone who is involved with either of these companies and played it or called it correct, obviously, congratulations. Happy for you guys. But that's pretty much it, so I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up, algorithm, helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.